Good day guys, you're welcome to the channel guys. So today we're going to talk about how to identify directional buyers in the first market. Don't forget to like and subscribe to the channel. Identify directional buyers has two components. We have trends and we have space. These are the two things I use in identifying my directional buyers. Now when we say directional buyers, that means the direction which we favor to take positions from. For example, the trend we have market structure, which is something like this. If the market is going higher, creating higher highs and higher lows, that means the market is going upward. So we are only looking for buy trades. Now this helps us most of the time to be able to be right in our directions when taking trade. Maybe probably at the smaller time frame when you're taking those trades, you're taking it in line with the direction of the market and your bias is in line with the market direction. So this is the first way you can make use of market structure to identify your directional bias, which is found in trend. You can make use of moving average, which is a indicator. So we can bring out a moving average and we can see the moving average crossover. For example, all through here, let's delete this so it won't look complicated. You can see all through here, we can see the moving average cross and the market is going upward. And all year, the market has been going downward with the moving average cross. So with this, we can add it up to our strategy. Probably when the moving average cross on this pair going upward, we go down to the smaller time frame, start looking for trades. So we can look for any of your strategy, maybe a break and retest, a flip zone, other blocks and the rest. But we already know the bias of the higher time frame, which is this. We're using the daily. You can see how it is. So with the moving average, for example, we'll be looking for only buys based on the moving average. Now this is the first part. We also have HENKIASHI. So let's take this out. So this is the HENKIASHI chart. So for example, why all these candles are bullish, you should only be looking for bullish days to trade. So you can add it up with moving average and the rest. There are other components needed in identifying our directional bias. So for example, on this side we have space. Space is very important. So to determine the space, we can make use of support and resistance or supply and demand. So for example, we can see this zone here. If we have been buying here, let's say for example, we make use of market structure and moving average using higher highs and higher lows. Despite that, after we are buying all year, based on space, once we come to this point, we are no longer looking for any buy positions. Why? Because we already see something like this here. You can see this is a zone here. So taking a buy trade at this point is not needed. So at that point in time, you either wait for a clear change, or if you have a strategy that trades from this point, you trade it like I do. I also have a strategy I trade from here, which is the range bound strategy. Very simple. You can check the previous videos, and also you can join the Telegram group, which the link is on the comment section and also on the description section. There you'll see our trade being placed and you'll be part of the community. On this point here, we have a resistance, which is this zone here. Price has rejected previously. So just blindly taking buy positions here is not recommended. This point is congested. So let's say for example, if this market is going down and there is a cross on the moving average and the market is going down, you also identify the different space available for price turning points. So with that, you don't get burnt by holding a trend that is about to change. So the major reason of identifying your directional bias and keeping intact of your directional bias is for you not to get burnt by a changing trend. So let's say for example, if the market is going down at this point, let's say it crosses here, we had this, start taking sales and the rest. So once we get to this point here, our bias, we have to freeze. So either we wait for a push upward or we wait for a collapse to the next zone, which is just here. So once price breaks this point, our bias becomes to sell. But once price is rejecting from this point, we wait for a clear direction. If the market push up, our bias becomes to buy this market. That means the market is bullish All we have to do is to go down to the smaller time frame and start looking for trades upward. Now there are so many strategies, so many approaches to look for trade inside, which I believe you already have. Um, so you can make use of any one of it. So this is just for identifying that bias so that you don't get stuck on a trend that has already changed. So this is GDP USD. For example, we can see the market rejecting from this zone here, and this price has rejected previously. We will see the collapse, and price is currently at this zone. So there is a tendency of this market pushing lower. So trying to buy at this point is almost useless. You wait for either the market to break above this point or to go down. So guys, let's move to another pair. Let me show you how you can also make use of your directional bias. So guys, this is USJPY. So directional bias, remember, we make use of trend and space. So while the market was going down, our bias will be taking sales from the lower time frame, which you can make use of different tools, maybe normal market structure. If you're making use of moving average, that's also fine. Um, so with normal market structure, you can just picture it out. But if you're making use of moving average, let's say for example moving average cross, and you're looking for only sales on the lower time frame with your own strategy, taking sales down to this point here. So based on space, we know that once price get to this point, our bias has to change, or we have to wait for the market to decide its direction before we make our next move. Now, another way to make use of it for your trend bias, you can make use of the HENKIASHI chart. For example, you can see pure bearish pushes. When there are pure bearish pushes days, that's very wonderful. So all you have to do is look for other trade from the smaller time frame. Maybe you're taking flip zones, even though it's break and retest, any strategy you use is okay. So all you just need to do is go down to the smaller time frame. This is the daily time frame, and you start looking for your bias. So if you're a swing trader, you can make use of the monthly time frame or the weekly time frame to identify your directional bias with these few ways I identified. You can make use of Hekenashi, you can make use of moving average, you can make use of market structure. Just reviewing it, picking this swing high, swing low, you identified. So for example, you can see this zone here. So based on space, we can see here this is a support in the market, and if you just take this, here is a demand in the market. So once price came to this demand and added with its support, this becomes a confluence. Now our directional bias changed from selling this market to looking for bullish opportunities upward, because based on space, this space has been covered and we are at this zone that has high chance of pushing the market higher. If the market would have broken this zone, we would have taken this sell bias down to here, and once price reject, look for a bullish bias. So your bias helps you to detect per time on what to expect from the lower time frame or what to trade from the lower time frame. So for example, if we have a bearish bias from the daily time frame, we are looking for only short opportunities, selling opportunities from the lower time frame. With this, we'll be intact and make more profit since we are following the trends simultaneously. So for example, our bias changed when price get to this zone because this was a demand and also a support in the market. So let me change this. Let me change this to normal candle. For example, you can see different sales opportunities. So you can make it of any of your strategy, it works, any of your strategy. So for example, this is just simple supply and demand. Once price gets to a supply, you sell, supply, you sell, supply, you sell, because the daily bias is bearish. Now on a bullish point, now one price changes to bullish, you just take only buys. Once it gets to a zone that's covered that space, so we look for another bias. So for example, if this market gets to this point here, we patiently wait. If the market is rejecting it, but if the market continue, we start looking for more bullish buyers, buying out this zone, buying out this zone until we get to this point here. So guys, don't forget to like and subscribe to the channel, and also guys, don't forget to join the Telegram community. I'll be dropping signals on the Telegram community, which will also help in adding value while you're trading. So comment on the comment section anything you learned. If you have any question, yeah, I can do another video on covering those questions. I would like to know about those questions. Thank you guys for staying to the end of the video. I will see you guys in my next video. Peace out, guys.